there's no I in team. So today we talk to tax strategist, CPA wizard extraordinaire Brandon Davis about what you can do with your home office now that the 2018 tax deduction is gone. Also, we're going to talk a little bit more about expensing a business vehicle inside your small business.
Yeah, we got some expenses that need to be pushed through.
Yeah, I need to get on there.
So the balance sheet is a snapshot in time.
Mm-hmm.
You know, it just shows you like at this point in time what it is. So I always, in order to drill down, so if I change the date like this year, last month, it's not going to change any of these numbers on the face of the report as of August 31. What it does do then allows me when I drill down into the deal to see what's been hitting here. Well, let me try to do what I can. So you might give me a day or two to get this over to the banker, so that's okay.
Mm-hmm.
That way we can. But I'll go ahead and head out some communication today to say, hey, here's what we're working on. Here's kind of the preliminary information you're going to need and what we're kind of after. So that way they can either tell us yeah or nay, they'd even be interested.
Already seen our vehicle or how to buy a vehicle for your small business video, check that out in the link down below. As well, there's several links to other great videos that Brandon has about tax and small business financial strategies. So stay tuned and check out the links below.
And then the other things you sent me some notes on were home office, which yes, you're correct. If you got dedicated space in the house, we use the square footage. So we take your rent. We also take your utilities too.
Oh,
so
okay.
if you pay utilities, so
I apply that same 0.6239 to the end of your utilities.
We will.
Okay.
So we'll take that 0.6239. In the past, it was a miscellaneous itemized deductions. Well, the new tax law changes in 2018. Miscellaneous itemized deductions went away, i.e. the home office deduction, unreimbursed employee business expenses, like traveling salesmen that didn't get reimbursed for mileage or meals or cell phone or whatever, but were employed somewhere. That's what they put as deductions. Well, those went away, so they didn't get those anymore. So I'm almost inclined to have Ducommun Properties maybe pay you rent for the office space that you're using there. And so we have another like little personal Schedule E.
Gotcha.
Where we deduct a percentage of your house as a deduction against that.
Okay.
That may be how we need to do that.
Okay.
Does that make sense? But as far as the home office, yeah, I think that's how we ought to play that.
Cool. Yeah, and then add that. That's good to know. To do the add the utilities
in there.
All right. Cool. So we just wrote it off. So it never gets entered into QuickBooks, correct?
Well, not exactly. I would put it on there because I always want my QuickBooks to match my tax return because it's going to go on the tax return as well. It's going to go on there as an asset because you own it, but we are going to take 100% depreciation expense on it and write it off in the first year. How much did you spend on it?
Like $2,000.
Okay.
Yeah.
This actually falls under what's called the de minimis safe harbor. So you're right. We could just because the de minimis safe harbor is $2,500. Yeah.
So
yeah, we could just expense it 100%.
And because the big thing I'm wondering is like as Trace is like buying gas and things like that. I just want to make sure I should allocate that to the vehicle, not to like the property that he's driving out to work on, or.
Well, you could do that. You know, we could do something like that. We could add, if we haven't already, you know how if you look at your,
And like when he takes it for maintenance and things like that, you know?
where's your profit and loss here for a second? We could add a class for the vehicle, if you wanna track it by itself, or just put it on our general operating. And then just, that way you can spread the cost against all of them. So like you have a general operating class,
Yeah.
so as you put your expenses in, you would just classify vehicle expenses as general operating.
Maybe let's add can we add the.
We can add a class for vehicle if you want.
Yeah, that would be great.
Yeah.
And then at the end of the year, I can just be like, well, how much did I spend, like, having this, you know,
And just tell him to
crappy car, you know?
put everything in there, you know, if he's putting the expenses in.
Yeah, he's been having trouble with his QuickBooks.
Okay. Send him by if we need to.
Yeah.
Does he use a laptop?
Yeah, I think he doesn't, I think he uses his cell phone. I think he just has it on
It doesn't work quite as cool, quite as
Okay.
well as the computer. He probably
Okay.
needs to get a computer.
I'll tell him, he has one at his house. I'll tell him to try to set it up on his computer.
Yeah, because the phone is limited.
Okay.
It really is. It's not as functional. So now, if we put an expense in for fuel or whatever, or maybe some in there already, I don't know. There's probably some actually to be classified. When you click on it, yeah, you'll put the class as vehicle, which you can start typing in as you know, it'll come up. And then the expense category could probably be repairs and maintenance if you wanted to, since we can just expense it. There's a lot of times where I put those items, but I won't add it yet.